Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil.
Paris rapeseed. The market's rise started in August from the support of the slowly rising long-moving average, currently at 479.25, and the 50% absolute Fibonacci line at 445.5. This move higher did not happen all at once, but during most of August and into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulders pattern, with a fairly flat neckline, currently at 477.25. 10 weeks ago, prices broke higher over this neckline and the last of the moving averages, and reached both the primary and secondary topside targets for this reverse head and shoulders soon after. In the process, prices also created a mid-August based expanding wedge pattern that soon morphed into a bull channel and saw prices the market run up within this pattern until mid-November, where they peaked at the March 2023 high at 540.75. The turn lower was quite dramatic, with a gapping move lower and a drop to finally halt last week by the rising medium moving average, currently at 489.75. Since then, we have seen prices rise and seemingly get stuck in the congestion between 513.75 to 519.5 that originates from September 2012. Interestingly, this congestion seems in recent days to be better at slowing rises than slowing declines. Now, for all this action, I have had the opportunity to draw a prospective dark blue mid-September to late November bullish Andrews pitchfork. The market right now is challenging the middle time, currently at 523.5. So, this pitchfork is working, but I'm not in love with this pitchfork, and I would finesse it in to a shallower bullish shift pitchfork, or even retire it completely if I thought it appropriate. But it does fit at the moment. Winnipeg canola. 8 weeks ago, I said, and I quote, "The activity over late July to date has also created a quite lopsided double bottom pattern. And last week we were trying to break above the neckline, which approximately equates to the 2021 low at 629.60. So that's 8 weeks ago," end of quote. Well, since then we saw the primary target reached, but in the process of heading higher, the market also created another pattern, a reverse head and shoulders pattern between late July to late October. 3 weeks ago, I said about this pattern, I quote, "It is waiting in the wings should the neckline be broken, properly broken, at which time I'll likely lay out some fresh targets for this new, currently potential reverse head and shoulders pattern," end of quote. We tested the neckline since late October all the way through to 2 weeks ago, when the patience with those who saw this pattern, including me, and were waiting for a break higher, well, they finally dried up and prices turned and broke down through the key long moving average below, currently at 628.90, triggering a big move lower all the way down to lows of February and August between 571.90 to 575 even. Thus, what earlier had looked like a head and shoulders bullish reversal pattern has turned out to be a head and shoulders continuation pattern, for now at least. The drop also set up the conditions for a potential longer term pattern, a monthly key reversal down for November. Now, so far we have not seen an immediate follow along lower to this pattern, to this monthly key reversal down. But it is appropriate to recognize its existence going forward. This leads me to a conundrum. You see, this drop also set up the opportunity to draw what is, on my daily chart, a dark blue mid-September to end November prospective, I would say even very prospective, bullish Andrews pitchfork. Prices over the last week or so have started the process of moving up and away from the lower time below, and that's currently at 585.90. Now, if only a few days gone, we can see that the pitchfork looks like it's working, but I am not in love with this pitchfork, and I would finesse it in a heartbeat to a shallower bullish shift pitchfork, or even retire it complete if I thought it appropriate. However, I wanted to make sure that you were aware of all the actions and opportunities that are presenting themselves here. Bursa Malaysia crude palm oil. I said 7 weeks ago, and I quote, "Of all the oil seeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April." Okay, that's the end of the quote. Okay, so the first pattern of these patterns is the broken upper time, currently at 36.73 of the August to November 22 bearish shift pitchfork. I know that this is way down, well below the current market, but the upper time had acted as a declining support throughout late spring and summer. The second pattern is the neckline, currently at 43.27 of the September to November 2023 reverse head and shoulders pattern. This is also way down, below the market. Not as far as the previous one, but it is important. Finally, I'd also possibly add the neckline, currently at 44.04 of the September 2015 to November 2017 head and shoulders top, though I'm really not sure about this one. This also is way below the current market, but it is significant, as are all 3 of these. Anyway, in early October, the market broke up over the lower September to November 2023 reverse head and shoulders neckline and became somewhat capped by that next neckline above, the one from September 2015 to November 2017 head and shoulders top. This bracketing of the market between these 2 necklines happened throughout most of October and eventually led to the formation of a mid-September to early November bullish halfway hesitation, which saw its topside targets reached 4 weeks ago. Prices next started testing a pair of 50% Fibonacci lines overhead, one from July 2019 to March 22 move at 49.64, and one from the May 20 to March 22 move at 49.92. And 4 weeks ago, late 4 weeks ago, the market seemingly broke free on the top side from both of these. Prices pushed up over one of the June 2022 highs at 51.17, but failed to sustain the move, with the next resistance being a changeover gap between 53.20 to 54.18, also from June 22, and then the big 50% Fibonacci line, the January 21 to March 22 move at 56.06, quite a way up. So prices pulled back down to that pair of 50% Fibonacci lines at 49.64 and 49.92, hesitating for a bit before dropping down and filling in the October to November changeover gap at 47.43 to 47.90. That was all the market managed to do on the downside, as since then prices have recovered higher, making a new high and new high close this week, not seen since June last year, and challenging the topside changeover gap on continuation charts between 53.20 to 54.18. At this point, I would like to raise a big point, a point I've been stressing now for 37 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now?" Well, for this, I went to my standby on such occasions, the longer-term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 22 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to that 44.08 area, and then what prices do at that level. End of quote. Excuse me. 3 weeks ago, I started analyzing the longer term patterns to ascertain what the opportunities may be. Here is what I said back then, and I quote, "Now, please note we have only had a single month's close over 44.08, and that was for October this year. And what I'm talking about is a very long-term pattern. Ideally, I'd like another consecutive month, and it is a very hesitant but on my part actually, it is a very hesitant part, but I will try now to give a preliminary idea for what we may have as an initial opportunity topside, but only should we have confirmation of the move above 44.08. Okay, so what am I talking about? What I am talking about would be the high on my daily chart way up in the 5600 area. This would tie in with the really big and important 50% Fibonacci line of the January 21 to March 22 move at 5606. Since then, we have had a second consecutive monthly close in November, up over 4408. This is not ideal, but it is the minimum quota to look at these higher levels, which are now appearing on the top of the side of my market, of my daily chart. Finally, with the moves up and down in recent weeks, it has given me the opportunity to draw a mid-October to mid-November bullish shift picture, highlighted in dark blue on my daily chart. Right now, prices are challenging the middle time, currently at 52.66. For now, it looks like this pitchfork is working, but I'm not in love with this pitchfork and I would retire it completely if I thought it appropriate. However, I wanted to make sure you were aware of all the implications and opportunities and actions that are presenting themselves.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.